we will not know the answer to this Tesla
Right.
question until 10 years hence from now. But we do know to get to that kind of valuation,
Right.
you need to have
Right.
extraordinary levels of profitability
Yep.
in a very large business.
Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. Today we're listening to some comments from Tesla and stock analyst Toni Sacconaghi, who, to be honest, has a pretty great track record according to tipbreaks.com. So it'll be interesting to see what does Toni have to say about Tesla, Tesla stock, their market cap, their future potential in the electric vehicle market, and more. So let's see what he had to say. But first, hey guys, if you're in the US and you'd like to help out the channel and get a free stock, check out the link in the description to WeBull. If you open a new account and fund it with $100, you'll get a free stock valued up to $1,600. And if you're in Australia, the UK, or New Zealand, you can get a free stock with stake, also using the link in the description. Let's get back to it.
I want to talk about one of the hottest stocks this summer, and that has been Tesla. A report saying the China-based mass production of the Model 3s for export to Asia and Europe will probably begin in the fourth quarter and could ship before the end of the year. Joining us right now is Bernstein's Toni Sacconaghi. He's one of the most respected analysts in this space. What do you think of the valuation of Tesla at this point, Tony? How do you even begin to model it out?
It's a fantastic valuation, and we, along with many investors, I think really struggle with that valuation.
It seems to be a recurring theme that analysts discussing Tesla stock these days, for the most part, they're either talking about the autonomous opportunity, the energy component, etc., and how huge the potential for Tesla is, or they're saying, to be honest, the valuation of this company, the stock price, we're really struggling to make any sense of it. This is the disconnect between those analysts who are used to assessing automotive companies and those analysts who are now looking at Tesla, scratching their heads, wondering what the fuck they're actually looking at.
To us, it implies that Tesla will become, the largest car maker in the world and have by far the highest margins as a mass market car maker going forward.
I personally believe that this is a pretty reasonable scenario. Just keep in mind, this again is looking at Tesla as if they're only an automotive company. But I do actually agree. I think over the long term, Tesla will inevitably become the world's largest automotive manufacturer by unit sales and far and away have the largest margins of anyone in the space because of the huge software component and Tesla's relentless focus on driving down costs of manufacturing and production. So it's great to see that there's more and more analysts now starting to entertain the idea that Tesla may in fact be able to continue growing production at the staggering rate that they have over the last decade or so and eventually reach millions of units per year. But I still believe that most analysts are completely asleep on the energy and the autonomous components, which I think each will become larger than Tesla's core business of automotive in the long run.
Its valuation is higher than the combined valuation enterprise value of VW and Toyota, and those companies collectively make 20 million cars. Tesla makes 500,000 cars. So it's an extraordinary valuation. Clearly, investors have a lot of belief that there's option value in Tesla beyond the core car business, but that it'll be a formidable player going forward.
And so, Tony, then do you recommend the stock, given what you just said?
We do not, actually. We lowered our rating a few weeks ago to underperform. Right. We're pretty big believers in electric vehicle adoption, but we really got to the point where we just struggle to, even in our most aggressive scenarios, justify a price target that was close to Tesla's prevailing price.
Now, I haven't actually seen their research. I'm not sure if it's available publicly or not, but my hunch again is that they're really looking at Tesla as an automotive company and trying to figure out, okay, how many cars do they need to sell every year? What do their car margins need to be to make sense of this? What about the autonomous component? Taking a cut of all those robotaxi fares? What about the ride-hailing network, which they're sure to launch before the autonomous network just to get things up and running? They'll be taking a cut of all those human-driven fares as well. What about Automaker distributing energy throughout the world? What about the battery storage business? What about the solar business? There's lots of components that I think most Wall Street analysts still are completely disregarding. They don't see the potential, or it's out of their domain of expertise, or they just don't really think it's worth considering at this point in time. I think this is the key distinction between the analysts now who are very bullish, who see potential in the future for all of these other businesses. Don't forget about Tesla Insurance and things like that as well. So it'll be fascinating to watch over the ensuing months and years how the analyst narrative changes. At the moment, the majority of analysts really hard to justify Tesla's stock price. If they're just making cars, they need to make more than everyone else and have insane margins. We find that hard to believe. I think the narrative is going to evolve over time to say, oh, well, Tesla's going to be making millions of units of vehicles per year, and they're taking a slice of the autonomous market, and solar, and batteries, and energy distribution, and who knows what else. So, key here, pay attention to what the analyst is saying in the narrative, because once more analysts start to see the picture, the mainstream media, the finance media, everyone's opinion is going to continue to flip. 6-9 months ago, Tesla's doomed, it's the end of the world, they're going to go bankrupt, they can't make money. Now it's, oh, they can make money, but they need to make way more cars to justify the valuation. Watch, the narrative will continue to evolve. Mark my words.
Here's the thing, and this is true also for Apple, I'd ask. What becomes the tipping point? What becomes, to the extent that you think this stock is going to go much, much lower, what's the trigger?
Well, look, anytime stocks have tremendous runs like this, there's increasing expectations. And any shortfall relative to those expectations can have an outsized impact on valuation. And we saw that to some degree earlier this week when Tesla was not included in the S&P 500 and the stock, declined 21% on Tuesday.
There's definitely some truth in that. High expectations mean that if you miss the mark even slightly, the stock can react very negatively. Totally acknowledge this. But I do just want to ask the question. I do wonder how much of the price decline after Tesla's failure to be included in the S&P this time around actually came down not to Tesla investors, but dingbats who bought into the stock in the hope of a huge bump in stock price after the S&P inclusion announcement, only planning then to sell, or people that were front-running the stock expecting they could then sell those shares to fund needing to buy the stock to match the S&P index. I'm not so sure that this was necessarily Tesla investors who were freaking out and bailing because the company didn't get included in the S&P, but maybe more so people that just thought, oh, well, this will be some easy money. Obviously, they're going to be included. I'll buy the stock. I don't give a fuck about the company. I don't know shit about the company, but I'll buy the stock. Surely it'll go up around that time, and then I can sell it and make a huge profit. Next minute, not included. Oh crap, my plan didn't work out. I'm going to sell this stock because I'm not an investor. I'm a short-term gambler and my gamble didn't pay off.
And so, heaven forbid that deliveries are not strong or as strong as people thought, or margins are a little lower. Again, the more elevated the valuation, right, the steeper the run-up has been, the bigger the downside risk obviously is.
But Tony, the thing that I can't figure out about Tesla is it seems like so many of the investors, and you mentioned it too, aren't just betting on it as a car company. I mean, we've had Chamath Palihapitiya on this program. He said, look, you have to have a 10-year, if not longer time horizon, and this is not just a bet on cars, it's a bet on so much else.
Shout out to Chamath. I love the guy, one of the most articulate, sharp, switched on, and correct investors of our time.
You have so many retail investors in from Robinhood and other places who I think may be making that bet. I don't know if they realize they're making that bet. And therefore, it's and then you have the Ron Barons of the world, by the way, who've come on this program. And by the way, he has been right, or at least he's appeared to be right thus far. And
another shout out to Ron Baron, also one of the smartest investors I'm aware of.
Look, there are a couple different phenomena happening. I think you alluded to the fact that we are seeing very high valuations across the technology space. These are the highest valuations we've seen since the technology bubble in 2000 and the subsequent bursting of the bubble. So we've had tech outperform for 8 straight years. It's outperformed by over 30% this year.
All right, guys, I've got a pretty crazy, wild, out there prediction. Are you ready? Hang on, coming closer. I don't want anyone to overhear this. It could be incriminating. Ready? I think tech is going to continue to outperform by miles for the foreseeable future. You can quote me on that.
We do have very high valuations, and Tesla is, among the poster children for what has happened in the marketplace. When stocks go up 25% because of a stock split, and you're seeing, several 100,000 retail investors own a stock at one brokerage firm alone, like Robinhood. Those are things that we saw in 1999, right, and those are worrisome things. Now, we will not know the answer to this Tesla question until 10 years hence from now. But we do know to get to that kind of valuation, you need to have extraordinary levels of profitability in a very large business.
I again find myself in agreement with Tony here. We are going to have to wait a decade or so to really see if Tesla can pull off what I'm inferring they will. This whole channel, I've been making claims about Tesla's future. I do not give a shit about today. What I care about is 2030 and beyond. As I've said many times, I'm a multi-decade investor. I do not intend on selling any Tesla stock for at least 10 years from today, and I began investing in 2016. If you're a regular viewer of this channel, you'll have heard me say many times, Tesla has won the decade. Of course, we'll just have to wait and let this play out, because until then, there is a level of uncertainty, and in my opinion, that is where the investment opportunity lies. Once everybody unanimously agrees Tesla has won the 2030s and beyond, I don't know if the investment opportunity is going to be so great. But until then, until we hear the narrative completely flip from this is going to be really hard to justify the valuation to it's a done deal, that might be a point in time where I'll start looking for other investment opportunities. But until then, I'm still buying Tesla. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. And don't forget your free stocks with WeBull and stake using the links below. Deposit $100 in your WeBull account and you'll get a free stock valued up to $1,600, and stake, spin the roulette wheel, you'll either get Nike, GoPro or Dropbox.
Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.